Hello guys, so today I want to share something with you when it comes to trading boom and crash index, and I want to show you a strategy that you can use called the scalping strategy. Now this is the boom 100 index market. As you can see, I'm scalping. One of my trades is running, but of course I'm just trying in a demo account, so this is not a real account. So let's go. Number one thing, I'll show you a strategy where you can do scalping without making too much losses. Like the profits will be by your side. Now looking at the boom index, of course you know the boom index, the spikes are always bullish, whereas the strings of the 1 minute small candles are always downwards. They are headed downwards. So this is what you do. Number one, you come and analyze the chart of the 1 day time frame. It's very important, first of all, to try to understand where the day is going to behave, like you have that picture of how today might be. So looking at our current daily chart time frame, our current 1 day time frame chart, you can see we have been bearish all along. Our markets have been going down. So again, we look at our awesome oscillator and see that this market has done a crossover strategy. The momentum is downwards. Looking at the positions of the moving averages are above the chart, so that of course gives us a hint that the market would be again bullish. But there sometimes you may find a bullish trend, but it's a bullish trend, but there is a it's a bearish trend, sorry, but there is a bull candle along the trend. Okay, so looking at today, I expect a bit of bullish and bearish. I expect a bit of bullish and bearish because this market has gone a bit has sold this market a lot. I can still apply an indicator here called the RSI to look at the position of the overbought oversold and see whether this market has oversold. So not yet. Let me make some few adjustments. I like mine being 70-30. Done. There we go. Okay, so looking at our chart, the RSI is still not yet it has still not yet confirmed to us that this market has oversold. But okay, looking at my chart, I can tell that this market has a bit oversold, so today we might expect some bit of bullish candles. Now let's come now to another smaller time frame. Let's come to 1 hour time frame. So I'm trying to show you how you can try to analyze if you want to do scalping successfully. Looking at our 1 hour chart, you can see that this market, our momentum indicator, is showing a bullish trend. Okay, and if I can look at here, I can see that there is a sign of resistance towards the downward side. Okay, so I can tell that today we might be bullish. Because the momentum indicator is trying to show us that the market is headed upwards. We have more, green candles that are headed upwards. Again, if I can try to plot some level here, I can see that these are two levels that have been tested here and here. So this is that this market is trying to resist coming down below this level, but it's not yet tested enough to see. But we can try and see whether it's how tomorrow will behave. We see whether it will bypass this level. So let's now go to the another smaller time frame. Let's take a 30 minutes time frame. Yes, you can see a 30 minutes time frame. There is this level, that this support level here. It's resisting this. It's supporting this market. This market. It supported this market here and supported this market here. Okay, cool. Again, our momentum indicator is showing an upward move, and again there is a saucer here. Okay, this saucer is very good to indicate that this market at some point it will be bullish. It is now. This is a point where this market is trying to consolidate, or like to gather energy to support itself so that it can take an upward move. Now this is what this saucer is trying to tell me. Now let me now go back to my another smaller time frame. Now let's look at the 5 minutes chart. The 5 minutes chart. Okay, let's take a 15 minutes chart. Now the 15 minutes chart is already telling us that we are bullish. As you can see, our chart is telling us we are bullish. So today, if you want to trade against the spikes, you must be very careful. And very careful, I mean, you can only try to trade against the spike if the market has obtained a high level. So in fact, today the best way to trade is to trade with the spikes. You just wait until the market comes down. Now let's come now to our 1 minute chart. As you can see, I had already taken a sell trade from this point after seeing this market come to this high point here. You see, now I took this as this is a point of resistance and this is another level of resistance. So when the market came here, it came down and produced a bit volatile spike, but never bypassed that level. So I took a sell trade from here, but my sell trade is not going to be long because I can expect anytime the market to reverse very quickly. In fact, when I'm trading against the spikes, and my overall analysis is telling me that trading against the spikes might be detrimental, so I will just take a risk to reward of 1:1. I will not go so long, so that one I will take it as a one trade, and I have won $10 having applied a stake of $10. So you can use any amount of money that you will to trade with, but I always say that when you are trading, trade that with the amount that you are not willing to lose. Don't try to trade with your rent, don't try to trade with the school fees, because when you're trading, you carry trading carries a certain level of risk that can hurt you if the market goes against you, and you see your target is to win, it's not to make a loss. So again, it's always good to use a good leverage. When you try to and see that your accuracy is a bit high, you can use a bit higher, but don't take too much risk. Okay, for example, let me give an illustration of what I mean. For example, in your account you deposit $100 and you spot a good entry. Okay, don't put all your $100 on that trade, because and you use a higher level of risk. What you do instead is, out of that $100, trade with a smaller amount and see what you are going to make out of that stake. Number two, you can use a smaller stake and with a larger multiplier. For example, here, to calculate your gross profit, you take the amount that you're trading with the difference in the price change, that is the initial price, the difference between the opening and the closing price. Then that difference you divide by the opening price, multiply that by your stick and the multiplier you choose. That's how you get your gross profit when you're trading on this trader platform using the multipliers. Okay, so that's a lesson for today. So again, so when it comes to scalping, you only try to scalp when the market has made an upward move, so that you can take a sell trade when the market is on a high level. For example, it would be very risky to try to scalp on these levels, because here you can see the spikes were a bit frequent. They are more frequent than when you trade from this level. You see, trading from this level gives you an advantage of this market coming down. So all you need to do is to identify where the market has attained a high point and try to make a sell trade. Again, I will not tell you that this is 100% perfect. It depends with how the market is, because sometimes you might try to identify and think that this market is going to go down from that point, just find it continuing going up and taking away your money. For example, let me try to find a good let me try to find a bullish. For example, when the market is bullish, which is the market has always been bearish. Now let's look here. Now this market comes up to this level, you can see. Okay, and maybe you want to take a higher risk to reward ratio. Now you see, trading from this point, it took you up to this level, and perhaps I know that this difference did not give you the money that you wanted. So you see, a huge spike takes you out, takes all your profit out. Okay, and now it continues to go up to that level. But let me try to plot another good one and see. Scalping can be very profitable if you do it correctly. If you do it correctly, it can, benefit you a lot. So all here we are going through a bearish market. For example, okay, now look at this one. Again, let me give you another warning. Never try to scalp when the market has already moved downwards. Like if you, for example, look at this one. Now this market came all this far, so you saw it coming down up to this level, and now you want to take maybe scalping here. You see, this is a huge spike that would have wiped your stake. In fact, this would have wiped 100% of your stake, leaving you with zero. Again, when you are scalping, it's always good that you scalp in a very you have to be very clever, and you have to be very sharp when it comes to taking a profit. Don't delay the market trying to over expect that market is going to go much. You can plot a very good downward move that is going to make you profitable, but again, sometimes don't be too much over optimistic, because when you become too much about optimistic, you might lose an opportunity to get some money, because you see, you are trading against a spike that just occurs within less than a second. So you must be very keen. Now let's look at this one. This is a very good illustration. Now this market came up to this level, you can see with my pointer, then came down and then produced a smaller produced a spike that is smaller than the initial price. Now you would have thought that this market is trying now to come down just to be hit by all these other spikes. So when you are scalping, or when you are trading against these spikes in the boom 500 and 1000 index, and also in the boom and crash index. It's always good that you are observing your trade, because just 2 spikes or 3 spikes can occur consecutively and take you out. And one thing you should know is that when you're trading the boom and crash index, the stop loss is not going to obey these spikes don't obey your stop loss. So if it's going to hit you and wipe your money, it's going to take you out, and you're not going to like it, because you can set a stop loss of maybe $5, and the spike volatility is very high, such that it's going to take away maybe $10. So your stop loss is not going to help you, such that when it hits to $5, it stops taking all the losses. So it's going to just wipe the $10. Okay, again, if you are trading with the spike, now the advantage comes that it also does not obey the take profit. What it does is that if you are buying and the spike moves up and it hits your take profit and then exceeds your take profit, it's just going to close that market with that advantage of the take profit and some money on top of that. So guys, that's for today. Hope to meet you again. Have a nice time, and I just hope that you continue trading profitably. And again, even before I close this discussion, you can see I just a spike just occurred after I took my money. So be keen. Use a risk to reward ratio that's favorable, that's going to make you take your money before it's wiped by the spike. Thank you.